You ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 9th day of June, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. And that will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of your office, away from your desktop, point any internet-connected browser to cfrn.net/live. There you'll find a live real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live each day on our YouTube channel, youtube.com/CFRN. Not only do we stream live, but we archive each and every daily show. Currently over 1,700 daily episodes there for your viewing and educational pleasure. So with that, let's open with a word of prayer. Heavenly Father, we thank you for your great love and your blessing over our lives. Thank you that your favor has no end but lasts for our entire lifetime. Forgive us for sometimes forgetting that you are intimately acquainted with all of our ways, that you know what concerns us, and you cover us as with a shield. We ask for your guidance so that we might walk fully in your blessing and goodness today. We ask that your face would shine on us, that you would open the right doors for our lives and for our loved ones, that you would close the wrong doors and protect us from those we need to walk away from. We pray that you would establish the work of our hands and bring to fulfillment all that you have given us to do. We pray that you would make your way purposeful and our footsteps firm out of your goodness and love. God, give us a heart of wisdom to hear your voice and make us strong by your huge favor and grace. In Jesus' name, amen. Amen. Happy Wednesday. Hopefully it is a happy Wednesday for you, wherever you may be. Let me give you the numbers here from around the world. These are the cash markets, the indices, as they're called. Starting here in the U.S., the Dow down 36 points, NASDAQ up 14, S&P 500 up 2, and the Russell 2000 down 3. Very quiet, subdued, sideways trading continues. And again, our four major indexes. We have the Dow and the Russell in the red, barely, and the NASDAQ and the S&P in the green, just barely. It's as if nothing has changed really since yesterday. And for the most part, it hasn't. Just going through a very quiet time in the market. In the commodity basket, crude oil down 25 cents, trading 69.80 last. Gold unchanged. Silver up 27 cents, trading 28.01 last. That's a 1% gain for silver. In the Asian markets at the close, Nikkei down 102, Shanghai up 11, Hang Seng down 38. No movers, no shakers there. And in the European markets, FTSE down 14, the DAX down 59, the CAC up 12. More light sideways trade. So it is a mixed day in Asia. It is a mixed day in the UK. And as I mentioned, it's a mixed radio Wednesday here in the US of A, with the Dow and the Russell in the red, NASDAQ and the S&P slightly into the green. With that, we'll go to Michael and get a recap of what happened this morning in the live training room.
Okay.
If you are ready.
I am ready.
After that, I'll come back. We'll quickly go over the logic alerts, concierge alerts, all that, and answers to your questions. Michael, it's all yours.
All right, here we go. Good afternoon, everyone. Let's start out with this. If you have not taken a free trial with us, go to the homepage here at cfrn.net. And on this page, all you have to do is scroll down to where it says free 5-day trial, no credit card required. Click on that, and you'll be brought to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us your biggest trading challenge so we can tailor one-on-one training just for you. Okay. If you do that, hit the send button, you'll be sent a confirmation link. You must click on that confirmation link. Okay. If you don't click the confirmation link, we don't know that you took the free trial. So you got to click on that link. All right. All right. The spreadsheet today, we had a rough go today. We ended up positive, but it was due to a two-tick trade at the end of the session. At the very end, and we ended up plus 17.5, but I'll get into that. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 9th day of June, 2021. Today we made 3 ticks in crude, and we lost a tick on the ES. Put us at plus 1750 on the morning session. Today it took 45 minutes and 10 trades to get to the goal for the day. At that point, we're up 117.50, and we took a total of 15 trades this morning. So on the month now, we're at $3,190. That's over 7 trading days, averaging $455 per contract per 2-hour trading day. We've now gotten our goal on 108 out of 109 possible days so far this year. Now we got our goal. It took us a little while to get the goal, and I'll get into why in just a minute. But we did get the goal, and we were at better than we are right now. But I took one trade in crude oil that I shouldn't have, and I'll get into that in just a minute. And that stopped me out, and that made it a little more complicated. But anyway. So on the year now, we're up $75,720. That's over 109 trading days, averaging $694 per contract per 2-hour trading day. Okay, let's start out here with the ES. Now, on the ES, we'll start out here. Our first trade was right here. We picked up 2 ticks profit on that. It went down within the tick of where I thought it was going to go, but we got out with just 2 ticks profit on that. We missed this one, which would have been a break-even trade. We got a break even on that one. It looks like we picked up 1 more tick here to put us at plus 3. Then we picked up 4 there to put us at plus 7. Then I stopped out on this one to put us at minus 1. And that's where we ended up with the ES. You see it got really, really choppy through here, and we just didn't have a trade set up all the way through. At the end of the morning session, it did give a shorting opportunity right here, which for me probably would have been a break-even trade. I mean, if you would have held on to it, not move your stop to break-even right away, then you would have had this move down. But the chances are I would have gotten a break-even on that trade right in here. Any one of these right here, I would have gotten a break-even on. And that was it on the ES. Crude oil, I'll show you the one that I shouldn't have taken. And here we go. Right here, this was our first trade on crude. We ended up with the we ended up with a break even on that one. Okay, now it went up to where I thought it was going to go, but we ended up with a break even. I wasn't paying attention close enough, and I should have actually taken some profit on that. And we missed this short right here. I think I probably stayed out of that because I wasn't really liking the trend at that point. Then we missed a follow-up short over here. which went down to the level that it should have gone down to. I don't know why I missed that one. Probably the same reason I wasn't liking the trend. We took this one right here. Now this was right on the crude inventories. That's why I shouldn't have taken this. It went 3 ticks into profit, then it went up and stopped me out. So we're -8 right there. Then we got a +6 to get some back right over here. That put us at -2 on crude. And so we stayed -2 until our very last trade right in here. We picked up 2 ticks and that put us at break even on crude. Now this was the level that I thought it should get down to, and it took it a while, but it did get down there. And this was the one that I could see right below it, and it got to that one as well. And that was it. Now during the break, you really didn't have anything on crude during the break. All right. Now gold started off pretty rough with me right here. See, we went long and it stopped us out. Then we went short and it stopped us out. So it was whipping around right here at the beginning. And I had a feeling the way that it came down to the BBC right here, I had a feeling that this trade right here, this long trade, was doomed. As soon as I put it on, I think I said, I think this is going to stop me out. Because I saw the way that it whipped down to the BBC, it hesitated for a second and then just continued right down here. And Microsoft had rebooted on me overnight, so I actually had a 10-tick stop on this one. So it stopped me out -10 ticks on that first one. Then I fixed it while it was going down here. Then it came up here and it gave another short, and I was concerned about this one because of the way it was whipping down and back. And sure enough, I got short there and it stopped me out. At this point, my stop was at -8 ticks. So after these two, I was -8 ticks, and that was, those were my first 2 trades. So I was -18 ticks, sorry, -18 ticks after those 2. Fortunately, I waited for it. I skipped this one because I wanted to get out of this whipping stuff that it was doing, because it whipped up, it whipped down, it whipped up, it came back, hit the BBC, and this time the BBC held. So I let this one go to create the environment that it should have. I'll show you what it did do, and then what I was waiting for it to do. All right, this is what it did do. In the pre-market, it whipped up, then the markets opened, and it whipped down. You see, now, this right here is the level it shouldn't have exceeded. And this right here is the level that it should have stuck at and moved up. And then this right here is the level it would have had to have exceeded to continue. So it went up, it whipped all the way down, exceeded that, stopped us out right here. Now this right here is where it should have turned around and started going back up. The legs should go up and down and up and down and up and down. This right here is where it should have turned around and started going back up, but it failed to, and then it whipped down and it exceeded this swing low right here. It went right down through it. Okay, so now instead of going up and down like this, you got up and down and up and down. And what I was waiting for was for it to calm down and give us an up and then a down like that, and then a back up. And that's what happened here. It came up here and paused, gave us this. Now I wanted to see it exceed this level right here, and I wanted to see it exceed this level, and this leg did it. That's why I waited on this one. I didn't take this trade. I waited on that one, and when it came back down here and it gave us another trade opportunity in here, this was pretty close because it almost stopped me out right here. But right here was a trade opportunity. I ended up taking 10 ticks profit on that. Okay, so I did all that drawing just to show you how gold was so whippy right at the beginning and how I was trying to stay out of it at the very beginning for this trade right here. Okay, so then we were at -8 at that point. We took a trade here. We ended up with a break even. Then we had a +11 ticks right there. That put us at +3 on the morning session. Okay, then you see the market was going down here and the slingshot was going up while the cycle was going up. So we had some divergence here between the cycle and the market, and we weren't getting any trade setups because of it. Then everything flattened out here. It started to kind of equalize where the cycle was going flat and the market was going flat. We took one trade here, ended up being a really long break-even trade. We had another break-even trade right over here. I missed this one, and I missed that one. This would have been a nice profitable trade. I'm sorry I missed that. This one probably would have been a break-even trade for me. Then this area right in here, I said this is what it was going to do before it happened, when this was happening right in here, because at this point the markets had pretty much died, and I pretty much resolved myself to be a -$2.50 on the morning. But it ended up taking off after we shut down for the morning session. It ended up moving up, and it gave One long trade right there. And recently, just now recently, while I've been talking, to give a shorting opportunity right there. That was gold this morning. So it wasn't easy trading today, but we ended up getting on that last crude trade right here. I don't know, did I do the crude? Yeah, I did do the crude. On this last crude trade right here, where we picked up those 2 ticks. I think I did the crude trade. Yeah, I talked about the trade I shouldn't have taken. And yeah, okay, we ended up back to break even. So we had -8, +10. I'm sorry, +6 and +2. But this one right here is what put us positive on the day, back to positive on the day. Okay. All right, so that was my morning. So it wasn't easy trading this morning. Now, any of you guys who are in here right now who have not taken the free trial with us or who have not been into the morning session, I think there might be a few guys in here who have not been into the morning session. Go to the homepage. I'm going to show you how again in a minute here. Just go to the homepage and sign up there and get into the morning session. Okay. Today, if you're going to read the spreadsheet here, you'll see CFTC risk disclosures down at the bottom. I have to say that. Today's the 9th day of June 2021. We made 3 ticks in gold, and we lost 1 tick on the sort of break even on crude. Put us at a modest $17.50 this morning. Today it took 45 minutes and 10 trades to get to the goal for the day. At that point, we're up 117.50, and we took a total of 15 trades this morning. So on the month now, we're up $3,190. That's over 7 trading days, averaging $455 per contract per trading day. We've gotten our goal for the day on 108 out of 109 possible days so far this year, and that puts us at $75,720 per contract per 2-hour trading day. That's over 109 days, averaging $694 per contract per 2-hour trading day. I keep saying that per contract per 2-hour trading day, but I really say that over and over again because I want to get into your heads that that's 1 contract, 2 hours a day, and still I miss a bunch of the nice trades. All right, back here now. We have, if you've not taken the free trial, go to the homepage at cfrn.net and scroll down here to where it says free 5-day trial, no credit card required. Click on that. And then scroll down to where it says watch live now. I'm sorry, not watch live now. Go down here to where it says 1 week free trial. Here all we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Okay. Hit the send button and you'll be sent a confirmation link. You must click on that confirmation link. Okay. If you don't click the link, we don't know that you took the free trial. All right. You got to click on that link. All right. And that was it for the morning session, guys. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir, I am. Recap of the recap.
Today, it took 45 minutes and 10 trades to get to $117.50 a contract.
Good job.
Thank you.
And by the way, Valerie did a great job yesterday doing the recap. She had everything you did marked out perfectly and did a great job of walking everybody through it. So
great.
Thank you, Val.
Thank you, Val. Yay.
Okie doke. All right, guys, more sideways trade. Now, tomorrow, I believe there's some news coming out, inflation numbers. You got your economic calendar open?
I'll pop it open. It's right here. Tomorrow, June 10th. We do have CPI, core CPI coming out pre-market. That's at 8:30 in the morning.
That's a consumer price index. So that gives us an indication, what inflation is about.
Yeah, the change in price of goods and services purchased by consumers is what it is. The forecast is for a 0.4% increase. I would be surprised at that. The core CPI excludes food and energy. So the core CPI
nobody spends money on that stuff.
Yeah, no, but it's going to have things like wood because
that's a big
lumber right now is huge.
Yep.
And anybody planning to build a house last year, their expenses have changed considerably since from then to now.
That's right.
And there's some other things coming out tomorrow too. We have natural gas coming out. We have a 30-year bond auction coming out. And federal budget balance is due to come out at 2 in the afternoon.
That CPI, is it at 8:30 or 10 a.m.?
8:30. Yep.
All right, guys, be
CPI
careful in the
and
morning.
CPI.
Careful in
And
the
there's
morning.
an ECB press conference going on at the same time. That is, it's scheduled 8 times per year, about 45 minutes long, and that's kind of a big deal. The ECB press conference is kind of the equivalent of us having Yellen speaking. Not Yellen. I'm sorry. You know what I mean.
Yeah.
But yeah. So there you have it.
All right. Okay. Well,
It's
thanks.
tomorrow.
Okay, guys. Logic 247, our round the clock, 24/7 Emini alert service, which is not just Eminis, but also includes gold, crude, silver, occasionally some other markets. We're in week 149. It's been a quiet sideways week. 27 total alerts issued, 2 never triggered, still waiting on the outcome of 3. 18% of actionable alerts stopped out based on not risking more than $300 per contract per trade, less when possible based on market structure, and a very simple 3-step process that we teach all of our traders. Now, those alerts, the Logic 247 alerts, I'm not going to scroll through all of them today because we just did that yesterday and not a lot has changed, but just so you know, this is what they look like as they come out live in real time. Okay, could be 2 a.m., could be 2 p.m. The Globex market opens Sunday night at 6 p.m. Eastern and remains open until 5 p.m. Eastern on Friday, with the exception of a 1-hour break Monday through Thursday from 5 p.m. to 6 p.m. Eastern. So today's Wednesday, but tonight at 5 p.m. that will end the Wednesday session, and then tonight at 6 p.m. Eastern that will begin the Thursday session, even though it's still Wednesday night here in the U.S. We are in week 149. Last week, week 148, which was a similar sideways kind of week. 42 total alerts issued, 7 never triggered, 2 carried over. So we had 33 actionable alerts, of which 18% were stopped out based on that maximum $300 risk profile that I mentioned. So this week's a lot like last week. Now, also, our concierge trade alerts are a little bit different because these don't come out around the clock. These come out once per session, shortly after the Globex Open. So last night at 6:05 p.m. Eastern, Tuesday night for the beginning of the Wednesday session, which started last night at 6 p.m. Eastern. There's 2 numbers for each market. Way to handle it is, once this is published, go to your appropriate chart, put a line in the sand. A line at 42.33, a line at 42.20. And once this is posted, if price starts trending up towards 42.33, that's bullish. So our strategy will attempt to find opportunities to buy the market, buy the dip. If price starts trending down towards 42.20, then our strategy will look for opportunities to sell the market or short any rallies. All of these, including the logic alerts, are based on the prevailing 30-minute trend as defined by our indicators, in particular the BBC. So let's go to the daily chart, and this kind of says it all. We're still just hanging. Now we had that bearish, well, it's really an outside day because we closed as a doji. We didn't really have a red body. That yesterday's candle, daily candle, could have been very bearish for the market, kind of like this one. But as I said on the show yesterday, if we don't close with a lower red body, then it's just more of an outside day, which is a continuation signal, as opposed to being a bearish engulfing candle. This was definitely a bearish engulfing, and this sent us back to our deepest pullback of late. Now, we caught a new all-time historic closing high on this day, June 4th, Market closed at 42.2775. This was the previous 26.75. So right here, new all-time historic closing high. And now 3 days of just simply sideways. Let me refresh this chart. There we go. So resistance overhead would be today's high, then yesterday's high, then the all-time historic high, and this old trend line up here. Support below us, low of the day, the step line, the low of yesterday, and the daily BBC. Price always reverts to the mean. The green line is called the BBC, stands for bull bear cross. When price crosses above it, we're bullish. We anticipate higher prices. When price crosses below it, we're bearish. We anticipate lower prices. If we fail to put in a new all-time historic high, then this is the 24% fib retracement of the entire move up, which began November 2nd. Right here is the 24% fib of just the last leg up. So if price trades below the step line, below the low of yesterday, gets below the BBC, there's this bullish cross here that we've talked about. That's potential support. And then just below that's the 24% fib. So if the market started to sell off, there's a lot of areas where the market can find support, could create some choppy trading. We long for a return to these days, but for now, we just have to be patient as the market treads water sideways. We just gotta tread along with it. On the S&P, we barely reached the CTA on the upside, 42.33 and a quarter. We put in a swing high at 35, so 42.33 was the actual CTA, and we put in a swing high at 42.35, 2 points. So we're dealing with basically a 20-point range on the entire week. I mean, this is about as quiet as we've seen it. Sitting at the top, wondering what the Fed's going to do. Are they going to taper? How fast? How much? This is the most difficult trading you'll ever come across. I mean, these are 30-minute candles. When you've got a candle that closes above the VBC and then below and then above and then below, and you just got to stay out of that, because unless you're trading on a smaller time frame like we do in the live training room, there is no big picture opportunity here. Just as soon as you think the market's going to head somewhere, it doesn't. And then it looks like it's going to fall out of bed, but it doesn't. The market is just very comfortable right now trading inside of this range. High on the week, all the way up to that spike's 42.37. Now this did spike down to 42. We could call it 30-point range on the week, but the meat of it is about a 20-point range. And if you remember, not too very long ago, we were having days where we had 30-minute candles with a 20-point range. Now we're talking 3 days of the market in a 20 to 30-point range. Is it broken? No, just a lot of indecision. We had a doji yesterday. Who knows what we'll end up with today? But this market has to make a statement, either to the upside by taking out this all-time historic intraday high, or by breaking down below the BBC, come down and challenge all of these many areas of potential support that we have below us. So all the CTA was able to offer up last night was just one little 2-point opportunity. On the Dow, there it is again, more sideways. Did trigger on the short side at 34,540. We made it down to 45.17. That's 23 points at $5 a point. We triggered one more time, and we dropped from 540 to 523, 17 points at $5 a point. Won't even go into the bullish crosses and bearish crosses because you can see they barely exist. So we have to expect this area to be good support, which will send us right back up to good resistance, and the ball will just keep ping-ponging back and forth until we make or break one way or the other. On the Russell, here's the open last night. We traded up to the weekly trading zone at 23.49. Hit a bearish cross, but we triggered neither the long CTA or the short CTA. The highest probability move from here would be for price to find resistance where it is and give us a leg to the downside, or continue up to the BBC and give us a leg to the downside at that point. On the NQ, we did trigger the CTA on the long side. The number is 13,850. So the first trigger took us up to 864. So that's 14 points at $20 a point, $280 per contract traded. Then price gets back below the trigger. Off we go again. Important prices, important areas are almost always tested, even under these conditions. And so we make another run from 850 to 904. So that's 50 points, $20 a point, $1,000 per contract traded. We've got a high here, and we've got a lower high right here. So prices come down to the BBC again. It's triggered a second time. However, you want blue and climbing on those triggers. When you trigger right into red and falling, that's potential resistance. So we'll see if this one even gets out of the gate. And we got this weekly zone right overhead at 13,870. That's where the market found resistance on its attempt to move higher. But we closed right back, even though we spiked it, we closed right back at the weekly trading zone. And here's crude. Here's the open last night. We triggered the CTA on the long side, 70.35 up to 70.42, and then back below the trigger, up to the weekly trading zone from 70.35 to 70.50, and a little above. It's $150 per contract traded. We then get back below the trigger, but now we have to deal with red and falling overhead. Not fertile conditions for a long trade, although we did go up and hit the zone again, pulled back, hit the zone again. So there were a number of triggers at the CTA on the long side. On the short side, we came right down to it. Remember, the CTA is like a daily trading zone as opposed to the weekly trading zone. We know the weekly trading zones serve as fixed support and resistance for the entire week, and as you can see, price came right down to 69.45 to the CTA and was rejected. Only three things happen at a weekly trading zone. Same is true of, I guess, the CTA. Consolidation, most likely, and then rejection. Third and least likely is the slice. That's where price just slices through a zone like it's not even there. We came down to this zone and consolidated, ran back up to red and falling. It sent us back down. On the second trip, we made it through the zone. Price looks to be headed back towards the trigger, but with this big wick, the market found a lot of support here at the CTA number. So I would suggest allowing price for the market to prove itself and actually get below that swing low, which does create a window of opportunity from about 69.35 down to 69.20. So about $150 per contract move. Weekly trading zone 69.15/69.20. On gold, there again the iron curtain ran right up to the long side, got rejected. On the short side, we actually traded, the CTA was 1892, and we traded down to 89.3. So a couple points, $200 per contract traded. Then another attempt, roughly $200 per contract traded. But see, even in the metals, we've got this sideways trade. The only thing that seems to be behaving semi-normal at this point would be crude oil. And then there's silver. CTA on silver was 28.15, and that's right where the market turned. Short side never triggered. From here, potential pullback to the BBC, which we expect to be good support until proven otherwise, and a continued move back up to the CTA. And if we can trade above the CTA, we've got a weekly zone overhead at 28.21 and 28.37. And it all comes back to this. We need this to wake up, get out of bed, get moving, and then the markets will return to some normal volatility. We got spoiled of late with all the volatility we've seen. Michael, seems like some of the alerts don't have stops. No, they all have stops. We don't want to risk more than $300 per contract per trade, less when possible, based on market structure and the simple three-step method that we teach all of our traders. So all of our traders know exactly where to put their stop loss. $300 is the maximum risk on the 30-minute chart. In the live training room, we use an 8-tick hard stop on every trade, on every market. If you have any more questions, put them in the chat box, because we're headed to the good word for the day. Again, if you have any other questions, put them in the chat box so I can answer them for you. Yesterday, we talked about honesty. Today, we'll talk about, find my notes. We'll talk about marriage today. I think a large percentage of our audience is married. Ecclesiastes 9:9. Enjoy life with your wife, which is kind of like that saying, happy wife, happy life. To strengthen your marriage, you need to realize 3 important things. Yes, Michael, alert number 7562. That stop loss is determined using market structure, not to exceed $300 per contract traded. That depends on the market structure at the time of the trigger. Yeah, just book a one-on-one session. We'll be happy to go over it with you. Marriage is one of the enemy's favorite targets. Or get with Valerie, she can help you too. Marriage is one of Satan's favorite targets. He was angry because Job's family was a source of delight to God. So when your home is harmonious and blessed, he'll try to attack it. He wants to be the third party in your relationship. He wants to agitate and disappoint using your weaknesses. He inspires unrealistic expectations and diverts your focus from servanthood to self-absorption. He fuels your imagination through unhealthy relationships, until God's presence ceases to be the goal of your union and the prevailing atmosphere in your home. Beware of his inroads and become protective over your family. Number 2, your mindset determines your mood. Thoughts have presence. The moment someone walks into a room, you can sense conflict or contentment, jealousy or joy. Attitudes are contagious, like a thermostat. They determine the climate in your home. One man noticed that certain TV shows nurtured a sexual restlessness within him to the point where he found himself comparing his wife with the sensuality of the performers. A woman identified the timing of unexplained jealousy towards her husband after watching her favorite soap opera. Every emotion has a birthplace, so be sensitive to any changes in your home and in her life. And number 3, understanding comes by listening. Love is about listening more and talking less. Listen long enough for hidden emotions to be expressed. Listen carefully enough to gain understanding. Listen accurately so you can assess your spouse's true needs. The questions you ask can reveal how much you care. So ask them softly and repeatedly, and pray and process before you respond. That's how you can strengthen your marriage. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.